Could we be on the verge of a new weaker dollar policy, and what would that mean for UK investors? Good morning and welcome to Morning Markets. Donald Trump desperately wants a weaker dollar, but his policies, including large fiscal deficits, tariffs, and as a result likely higher interest rates, point to the opposite outcome. One solution to this dilemma would be to initially go hard on tariffs imposed on overseas countries and then use the prospect of reducing those tariffs as a carrot in exchange for a weaker dollar agreement. Another solution would be direct exchange rate intervention, so printing dollars to buy overseas currencies. This is similar to the policy of former Japanese Prime Minister Shinzo Abe, who implemented a 50% depreciation of the yen between 2013 and 2015. However, unlike Japan then, the US is not currently mired in deflation, so such a policy could prove counterproductive, including higher inflation and possibly higher interest rates. What about the rest of the world? Will they just roll over and accept currency appreciation, particularly since their economies are struggling? Let's look at two examples, Germany and China. Germany, for many decades, has pursued an export-led growth model. And the currency union with weaker economies has benefited Germany in that it's had a weaker currency than it would otherwise have if it kept the Deutschmark. For China, they've intervened directly in the foreign currency markets to weaken the renminbi, and that's led to greater demand for cheap Chinese exports abroad. The prospect of tariffs has forced both countries to reconsider that export-led growth model and consider redirecting their economies towards domestic-led growth. For Germany, there's the possibility of increased spending on infrastructure, which has been underinvested in for years. Also, there's a need to reduce dependence on Russian energy. For China, the prospect of an unleashing of long-dormant consumer demand is likely. So what does this mean for UK investors? Although Donald Trump's target is probably continental Europe and Asia rather than the UK would probably be caught in the crossfire, and sterling would probably appreciate against the dollar as a result. UK investors in recent years have been heavily invested in the US market, and those positive returns that they've received from outsized performance from the US market has been compounded by dollar strength. If UK investors expect Donald Trump's policy of dollar weakness to be credible, then it would make sense for UK investors to hedge that currency exposure. Thank you for listening.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.